AI stocks are running again, while Bitcoin is still waiting for confirmation. At first, that looks strange because both belong to the risk side of the market, but capital does not always move into every risk asset at the same time. Sometimes money chooses the clearest story first. Right now, AI is the clearest story for many investors because the market can see revenue, spending, and momentum. Bitcoin is still important, but it is asking a different question. It needs liquidity, ETF demand, macro support, and stronger conviction before the move becomes cleaner. This is the calm metrics, and this video is not financial advice, stock advice, or a trading signal. It is a calm market brief about capital rotation. Today, we are asking why AI stocks can run while Bitcoin waits, and what that says about risk appetite. The first idea is that market strength is not always universal. A strong Nasdaq or AI trade does not automatically mean every risk asset must rise together. Capital can rotate into one theme first, then decide later whether to spread into crypto, small caps, or other speculative assets. That is why the phrase "risk on" can be misleading. The market may look confident in one area and cautious in another. AI can attract capital because the earnings story is visible, while Bitcoin may still need proof from flows, liquidity, and macro conditions. The AI story is not just built on imagination. Investors are watching chips, data centers, cloud spending, servers, and the infrastructure behind artificial intelligence. When companies show real demand behind that theme, the market has a stronger reason to reward it. Nvidia is one of the clearest examples of that AI leadership. Its latest results reinforce the idea that AI infrastructure spending is still powerful. That does not mean every AI stock is safe or cheap, but it explains why attention is still flowing toward the AI trade. Bitcoin is different because Bitcoin does not report earnings. It does not give investors a revenue number or a data center growth figure. Instead, Bitcoin is judged through price structure, ETF flows, liquidity, macro pressure, and investor behavior. That is why Bitcoin can wait while AI runs. Bitcoin may still be strong in the long term, but in the short term, it often needs confirmation. If liquidity is not expanding clearly and ETF demand is mixed, the market may hesitate instead of chasing aggressively. The next layer is macro pressure. Inflation, Treasury yields, the dollar, and rate expectations all affect how much risk investors are willing to take. Even when AI stocks are strong, Bitcoin can remain more sensitive to liquidity and macro conditions. If yields stay elevated, investors usually become more selective. They may still buy the strongest growth story, but they may avoid spreading capital too quickly into every speculative asset. That is one reason Bitcoin may not immediately follow AI higher. The dollar also matters because a firm dollar can make global liquidity feel tighter. Bitcoin can still rise in that environment, but the move usually needs stronger demand behind it. Without that demand, rallies can become slower, narrower, or easier to fade. The ETF layer is also important. Bitcoin ETF flows can act like a demand signal from larger investors. Strong inflows can support confidence, while weak or mixed flows may leave Bitcoin waiting for a clearer message from the market. This does not mean Bitcoin is weak. It means the signal is not clean yet. A market can respect Bitcoin as an asset and still wait for better confirmation before rotating more capital into it. Then we have stablecoin liquidity. Stablecoins are not the whole market, but they help show whether capital is still close to crypto. If stablecoin supply is healthy or growing, Bitcoin has more potential fuel waiting near the market. If stablecoin liquidity is flat or weakening, the market can become more fragile. In that environment, Bitcoin may move, but the move can lack depth. That is why the calm metrics reads liquidity as part of the pressure map, not as a single signal. Positioning is another layer. Funding rates, open interest, and liquidation zones can show whether traders are leaning too hard in one direction. When positioning becomes crowded, even a good story can turn unstable. If longs become too confident, the market can punish that confidence. If shorts become too aggressive, the market can squeeze them. This is why Bitcoin's next move depends not only on the story, but also on how traders are positioned underneath the price. So the real question is not whether AI is good or Bitcoin is bad. The better question is whether capital rotation will broaden. If AI strength spreads into wider risk appetite, Bitcoin may eventually benefit from that shift. But if AI remains the only clean leadership theme, Bitcoin may continue to wait. That does not mean failure. It means the market is still choosing where confidence is strongest, and crypto has not received the same level of confirmation yet. This is the difference between momentum and confirmation. AI currently has visible momentum. Bitcoin is waiting for confirmation from ETF flows, liquidity, macro conditions, and positioning. For investors, this is where patience matters. A strong move in one sector can create pressure to chase everything else. But the calm metrics does not chase one headline. We ask whether the data behind the move is broad, durable, and supported. A stronger Bitcoin setup would show several things improving together. ETF flows would strengthen, stablecoin liquidity would remain healthy, macro pressure would ease, and price structure would begin to confirm demand. A weaker setup would look different. AI might stay strong, but Bitcoin would remain stuck. ETF demand would stay mixed. Liquidity would not expand clearly, and futures positioning would become unstable. That is why this market is not simply risk-on or risk-off. It is selective. Capital is rewarding the clearest story first, and Bitcoin is waiting to see whether that confidence spreads. So the takeaway is simple. AI stocks are running because the market sees a powerful and visible growth story. Bitcoin is waiting because it needs confirmation from liquidity, flows, macro pressure, and market structure. AI strength does not automatically mean Bitcoin weakness. Bitcoin waiting does not automatically mean Bitcoin failure. The real signal is whether capital rotation becomes broader or stays concentrated in one leadership theme. That is the map to watch now. AI leadership, Bitcoin structure, ETF flows, stablecoin liquidity, Treasury yields, the dollar and trader positioning. Stay calm, read the data, respect the risk, and let the market confirm itself.